presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien in the Tom O'Brien Show on this Tuesday, the 10th of June. This is very interesting. We suddenly had a big spike up. The Dow's up 125 at 42,887. It made a new recovery high today. We've been waiting for that. I don't want to get too technical. I'll do that in my show tomorrow, the Tiger Technicians Hour. That's at 10 o'clock every weekday morning, 10 to 11 Eastern Time. But just real quickly, because it'll help you in what we're looking at here. I always look for the lowest low bar, then count each successively higher peak, alphabetize them sequentially. A, next peaks B, C, D, E, F, and G, but it's that fourth highest peak, peak D, that is the objective in a buy signal that gets upgraded to a buy mode. From that moment on, you've achieved your goal, and then you see whether or not you get a recycle to go higher, or this is where there's a pullback, and that's exactly where we are right now. We've gone by 1 penny. We went above excuse me, then 42,924 high of yesterday. Today's high is 42,925.94. This is starting that leg D, all within this rectangle formation, walking the 9-period moving average. I'll stop waving my mouse right here. I'll show you this. See that green line? Above the 14, look at that fantastic thing. Even when the market pulled back, the Dow pulled back so sharply, went under the black 14-period moving average, it remained green, which acts like a spring that says, I'm going to go right back. But it doesn't tell you how high, it just says I'm going right back over the green and the black 14-period moving averages. The MACD is just flat. It's slightly positive right now, so that's a positive. The gray line right here is relative strength. Stochastics back over 80% and 83%. That's good. And the blue line is the on-balance volume, and that's just weakening a little bit. And let's go to the S&P. So the weekly charts are also very strong. Let's go to the S&P. The S&P right now is trading up 33 points. That's 6,039. Made a new recovery high in that same pattern. I don't want to go into the technicals yet. We'll do that again tomorrow in detail. But look at that 9-period moving average holding very well. We have taken just the tiniest little short position, one of our first short positions in quite a while. We did it about a week and a half ago. Just got a 1% loss, and we were out of it, and that's it. Now we're going to try again to see whether or not at this particular point we get some kind of a sell-off. But in order to get a sell-off that is meaningful, the market has to take news and treat it as bad news. And then that bad news has to filter throughout the market. It has to be on the news. It has to be whatever it is, tariffs, whatever it has to be repeated over and over and over. And the market has to take a dive with the Dow down 500 points, the S&P down about 68, the NASDAQ sharply lower, semiconductor, everything's going down. We just don't have that right now. So this is just like a feeler position. We've had only longs. We're still long, aggressively long the Dow, but we're waiting to see if there's going to be some kind of a pullback, or we just go immediately for the S&P to the 6147.43 all-time high that was made. Look right there, the week of. That was the week of February the 21st. We went to an all-time high and pulled back very sharply from 6147 down to the 4800s, and then swoosh, we go all the way back. And now we're very close to an all-time high, certainly a recovery high, with today's high of 6,043.01. That is very good action at this particular point. QQQ, that's the Index 100 trading vehicle. And that is the Investor QQ Trust Series is trading in leg C with a brand new buy signal. So that 534.52 up 382. That if it's going to make a D, it can't do that until there's a lower high bar. That'll be maybe all of tomorrow if there's no high throughout the day tomorrow from today's high. And then you can have a big pop to the upside for a leg D. So far, this is still positive. The technicals are good. Stochastics 86%. I like that. So we'll see what impacts the NASDAQ to drag it down so far. Nothing. There's still a leg A from that low that was made. Unbelievable in the 400 area. And here we are at 534, still in one leg to the upside. Excuse me, frog in the throat. The high today of 534.90 is just 6 points, less than 6 points from an all-time high. Isn't that amazing? IWM, the Russell 2000, these are small caps. The Russell 2000, we've been waiting to see when it'll finally start to play leadership role. Here it is. Look, it's up very nicely, up $1.18, $1.20 at 214.55, above the 200-period moving average. That 200-period moving average has been tremendous resistance. It's the first time it's gone above it since it broke down back on the 21st of April when it was up in the 226 area, and now hugging the orange line, which is 200-period moving average, and then suddenly the last three sessions popped above it. That is a good sign. That's very important. So just before we go on, I want to mention the XLF. That's the S&P Financial Select Financial Spider Fund is up just 3 cents, but the KRE. Let me have a sip of tea here. There you are. Look how nicely that's done. For the first time, it's broken the trend line, holding the trend line, the weekly chart. So maybe what we've got here is a rotation that stocks like a GE down sharply, down 9 points. After making an all-time high just 3 sessions ago, 257 is now 242. Robinhood, also a leader for weeks and weeks and weeks, goes to 77.80. Actually went to 80 over after the close on Friday. Then it was known that it was not going to be included in the S&P, so it pulled back sharply. Still holding very well, but has pulled back. And I'm looking at some of these stocks and I'm saying, wow, if these biggies are now starting to take a breather, it's great that we've got a rotation. And I've been looking at the S&P 500 to the Russell 2000. That relationship of large to small stocks is the same as you look at when you're going from the S&P Select Financials with the JP Morgans, the huge bank stocks, financials, and you got the KRE, which is the regional banks. You need to have regional banks doing well so that you can get a nice broad market. Maybe that's happening finally. Oh, I didn't get to gold. Gold is down just 7 points. Silver's down 13 cents. We'll be back in a moment, and a little later we'll have some more. And that should be wonderful to have Tim to discuss the market. We'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien of the Tom O'Brien.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi everyone, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show on this Tuesday, the 10th of June. And usually this is the moment where Tommy would be interviewing me for my newsletter, the Tiger Technicians Hour. Is what I do every day at 10 o'clock to 11. But the opening call is my daily newsletter, very detailed newsletter. And I also do every day, I do a chart with the Dow, and I explain exactly what we'll be looking at. If after 1:30, such and such, then expect such and such for the close, etc. Quite a detailed newsletter. And I thought I'd just go over a couple of things. We're going to have Tim Ord in a little while. I'm looking forward to that. So let me just explain. So going to the Dow, we've been long the Dow, INDU, let me just get the Dow, for quite some time. So we're actually long right here. This is back in from here. The very low of 2020 in March at 18,213. That day we went long. So we've still got that position, even though we've had trading positions within that. And then we went long again in October of 2023. We still have some of that position, both in the diamonds and the 3 times long. You should never keep a 3 times long longer than a day. We've had it for a couple of years. It's still doubled and done very nicely. So what we're looking at here is that the most recent long that we have, we are still long. We started buying them April the 7th, the day of the low, and then we got stopped out. We got back in. So we're along that position, but on a very short-term basis, based on my methodology of the notation of the charts, when you get to this leg D, it's where other things can happen. It could recycle to a higher high. Many things can happen, but I'm anticipating we've used for the S&P for the moment, just to nibble on the short side as almost a feeler to see whether or not there's going to be some kind of a turn down, because so far the technicals are still pretty darn good. And I don't want to get in front of anything here, and especially if we're going to rotate from the big caps. I was mentioning the GEs. I said we actually long G for quite some time, from 198. It hit 257 the other day, peak E. I said, got to be careful here. We've taken quite a bit off for just money management, but we still have a nice core position. We are long Robin Hood for quite some time, from the 16s actually. We took bits off, and we've had trading positions. But now what we're looking at is it hit 77, 80. It actually hit 80 over after the close on Friday, and then it pulled back sharply. We've taken quite a bit off, but at this particular time, I'm thinking that I use Syntas. This is Syntas is. There we go. Syntas is the uniforms, etc. I'm looking at double top 228 12 was the high in November of 2024, slumps down to the 180 level, screams back up to 229.24 within $2. Less than $2 of the previous high, and now it's pulling back. I've been saying that's kind of a warning. Look at Goldman Sachs. 620.79 was the last high back in May, pulls back, and then it retests it, and 3 days ago it goes to 621.38, and there was a round number open. So I'm just saying we've got a lot of signs saying that maybe on the very short term getting a little bit choppy in some of the biggies, but I am impressed that you've got the smaller ones like the Russell 2000 holding so well at this particular time. So Bitcoin right now is trading, I haven't looked at the moment, it's up 1,055 at 110,180. We've been long for, right here, you can see we've been long from way down there through the IBIT, that's the iShares. Done very nicely, taken a little bit off. Try to keep as much of a core position as possible because I think it's still in play. But there is a chance that you got a double top. 112,635 in December, slumps down to the 775 area, 72 area, runs back to 113,060, and now it's kind of struggling a little bit. So I'm just watching these things. I'm saying, okay, you got to be a little bit careful there. Other areas, for instance, in the financials, we've got Bank of America been long for a very long time. Look right down there, you can see been long, taking a little bit off. But look, here it is in that peak C. There's a good chance it just pops a little bit more to a D, and then I think we've got to be careful. In the big picture, all of these monthly charts look fabulous, even the weekly charts. I'm just anticipating if there is some kind of a moment, I call it a digestive phase, maybe a 4%, 6% correction. It could get worse, but I haven't yet even seen a turn down to be able to discuss that. So all in all, what I'm looking at here is that many of the positions have done extremely well, and I do like to have, for instance, we have CDE, core mining. It's done extremely well, gone from the 7s. It's gone today, it's trading at 9.28. We've taken a little bit off, but that's in the silver area. So even in the, as I'm looking at this, I'm looking at different sectors, and within sectors, you've got a divergence. For instance, look, silver is, let me go to the silver chart right here. Let me go to the SLV. The SLV, look, the silver has gone, 34.08 has been the target that we've had. Today's high is 33.36. There's still got another month to go, at least 6 weeks to go to get to that level. It's almost done that. But that's a very different chart to the gold chart. Look at the GDX. Very different charts. So we are long gold. We've done very, very nicely with the gold. We are long in the silver through CDE. So I like to have a mix for my subscribers where we've got single-digit stocks, double-digit stocks, triple-digit stocks, and just a real mix and a real mix of categories as well. We even have DBA, which is the DBA Agricultural Fund, which we've had since way back here in 2020 in the 13s. And look how nicely it's done. It's at 27.08. This is the grains. There is some inflation in some areas still. So I just wanted to give you kind of a mix of where we are and what I do for my subscribers to my opening call newsletter. And within that category, we attempt to get into other areas. Sometimes we miss by a fraction, or we get in because stopped out for a tiny loss, and then it goes. For instance, that's exactly what we had with Chewy. Chewy Inc., online retailer of pet food and products. We got in right in here in the 38 area. And yeah, the darn thing is trading at 48.62 the other day with a 48 round number high. Now it's down at 45.78. So as clues, some of these stocks are saying to me, a little overbought. They need a little bit of a digestive phase. That's not to say major sell, just a breather to reinvigorate, to re-energize, to be able to get that next move to the upside going. So that's the way I'm looking at it right now, just to give you an overview. Now, here's some other things that I look at within the categories of what's working. We have AIQ. I've had it for a long time. This is the Global X Artificial Intelligence ETF. The target has been 42.78, the high that was made in February of this year. We're in from the 27-28 area. It's at 42 right now. Most importantly about this, it's in an area that if you look at this chart and you say, hey, is that global X artificial intelligence? And it's not screaming at record highs? Yeah, you see, this is the whole thing. That even in some categories that you think are just, that is it, you've got to be in. Sometimes they just move very steadily. They don't do this extraordinary thing. And that, to me, it makes it a little bit more bullish in the sense that I would much prefer to have higher highs and higher lows in a very steady move, although this weekly from 30.60 to where it is right now doesn't look very steady. It just looks like a spectacular move to the upside. But it's in an area that should have been on fire, and it's just doing very well. I like that because it gives time in 2025 for even higher highs. That's AIQ. I'm going to be back with Tim Ord from the Ord Oracle. It should be a great interview. I always love it. I've been listening to Ord since he used to be on with Tom O'Brien way back in 2000, even maybe before 2000. So it goes back quite a while. I'm looking forward to that. I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Basil Chapman here. And just before we go to Tim Ward, I had a question in the Tiger YouTube. Basil, with the IWM now crossing the 200 EMA, would you buy now or wait until we have what you call a digestive phase? So what I would say to you is I'll do more of it tomorrow morning, certainly on my newsletter, but I'll also do it tomorrow morning at 10. If you're prepared to put positions in, and treat this just as like a nibble, just to get your foot in the door. You get your foot in the door right now, it should go just a little higher than it might digest. And I'm just saying it's acting really well. This is the Russell 2000 IWM. Now we're going to go to Tim Ord. Tim, how are you?
Good. Glad to be on again. So,
well, it's great to have you. I bet you got a ton to talk about.
All right. Yeah, we could start on chart 1 there. I guess I'd be doing the charts.
Yes.
Let me get all right. This is a daily SPY, and we're going up against a kind of a resistance area, basically the highs of February. We're not too far away, but I thought we might pull back first, back to 570, or we rally to 610. I actually got volume studies. If you notice, the market's kind of rallying over the last couple of days. Today's not over yet. Right. The last 2 days hit higher high, and the volume kind of dropped off. But I got in the shaded blue areas here, I got the trend and tick closes, and anything on the trend close above 1.2 is bullish because it shows panic. Panic in the market is actually bullish, and tick closes, preferably below minus 200, are bullish. So they didn't quite get to bullish levels, but I put them there anyhow. Here's a 210. But a lot of times that builds energy in the market. Whenever you got panic in the market, you're going into a low. If you don't have panic, the market will keep going down until it does get panic. And panic can actually happen in an uptrend, downtrend, and kind of over the last, since April, the market, every pullback has put a little bit of panic in the market. And even in this trading range here going sideways right here, we have actually 3 different trend readings above 1.2 in that sideways move. So that was bullish. I thought we might still pull back to 570, but it appears we're going to go back up since today is up, close to 0.5%. We may try for that 610 area. Here's what I think is forming on the bigger pattern. This pattern is it's a weekly pattern going back to actually last year, November of last year, and it's a great big head and shoulders bottom. This decline was going into the April low, had a sign of strength off that low, and now we're into a trading range, my opinion, where you got 570 is the bottom of the trading range and 610 at the top. And we're going to probably bang around in this trading range probably until August. The reason why I say that... So,
Tim, I just want to say, so we're looking at a trading range that has been going on essentially from November. Even though we had that huge spike to the bottom, the majority of price movement has been within the trading range that you've got in this highlighted kind of pinkish area between 570 and 610, correct?
Yeah, 610, right.
Right.
And the whole thing is this pattern over here from November until February, March is the left shoulder. We're in the right shoulder right now. That may extend to August. The reason why I say that is because a lot of times there's symmetry in these head and shoulders patterns. So if the left shoulder took 3 months, the right shoulder will take 3 months, give or take a week or so. And so I'm thinking we're going to bang around in here. Even though the market's kind of going up here, we're going to find resistance back in this area. And I thought we may pull back first. It's kind of hard to say. I was long. I got out of my long position, made a small profit. But we're probably going to hit 610, stop. The only reason why I'm stopped, this is the summer. Summer, we're into what they call the summer doldrums. And usually you don't get major moves. You can, but you usually don't get major moves in the summertime. Those major moves start in August, September, May as late as October. So I think we're probably going to go up to or a 610 area in that vicinity. Find resistance. We don't really have a sign of strength going on in here, as last month, the month of May, broke above the previous, or last week, we broke above the previous 2 weeks ago, which was the high on actually 8% lighter volume. That implies a false breakout to the downside. You can still go higher, but ultimately you usually come back down. So I'm thinking, even though we may get a 610, we're not going to break through that high of 6. We'll get to it, but I don't think we'll break above it. Because to break above it, you need a sign of strength. And a sign of strength is basically a high volume push through those highs. So if you break above a previous high in a lighter volume, a lot of times they don't hold. They may rally a little bit, but they usually fall back. And so on this weekly time frame here, since this day right here came on 8% at lighter volume, it's probably a false breakout. So I'm not trading alongside here because it doesn't really have strength to really go far other than 610. And I think we come back down to support, which is basically the previous lows, which is around that 570, give or take. That probably finds support. And one key to find that support is when the ticks and trend in this vicinity start to go up. In other words, trend closes of 1.2 or higher, and downtick readings of minus 200 or lower. And usually those type of trend readings and tick closes show panic, and panic a lot of times comes as support. So that's what I'll be looking for on this next pullback. When it'll pull back, I don't know. Next week's expiration week, a lot of times that has a bullish bias. So don't know. It's just kind of not the time to really trade. The best trades come when you get panic, just like off this panic low. But I'm kind of being careful right now. Don't see any great trade setups. Let's flip to the monthly chart. This is a monthly SPY. If you notice here's the VIX on the bottom window. It's below 17. And if you notice, the VIX is actually going lower with the market going higher. That's usually kind of a bullish sign. Yeah, because if the market's going up and the VIX going up, that's a bearish sign. But so far, the VIX is going down, even though we don't have a lot of volume probably this month. The month is not even started yet, but we're probably going to find that 610 area. You can kind of see this head and shoulders pattern a little bit better. I put on a cycle type thing going on here.
Yeah, I see that. And that cycle goes to August, right?
Yeah, right to August. So
okay, we've got a lot to talk about. Let me just say, folks, this is Tim Ord, the Oracle newsletter, and we're going to be back in a moment. There's a lot to discuss, and it's quite exciting. What is the Dow? Dow is up 60, S&P's up 24. We'll be right back with Tim Ord. This is Basil Chapman, sitting here for Tommy O'Brien in the Tom O'Brien Show.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Hi, folks. We're back. Basil Chapman speaking with Tim Ward. And Tim, you're looking at the monthly chart of the SPY. Would you please continue?
Okay. I want to talk about it. I got this RR thing right there called, it's actually Railroad. And you see this big down day, and you see this big volume.
Yes.
If you notice, this is exactly the opposite here. You got big up volume, and you got this candles pretty close to equal to this down candle.
Yes.
So it's like a railroad tracks. You got.
I got it. Yes.
Right. So this is energy to the downside with big volume. This is energy to the upside, almost equal to the down volume going up. They call them railroad tracks, and they come at major turns in the market. So the bottom is in as far as April. We're not going to go back down and test that. So once you see a railroad track off of a bottom, that predicts the market's going to go higher. It doesn't say when, but that predicts the bottom's in. So this
Tim, am I correct? It does one thing particularly, and that is to decipher and say there's a climactic volume price reversal, but then it doesn't tell you time or price after that, but it does give you that ictus, that turn right there at that moment.
Right.
Good.
So now if this volume was half of what it was going down, then that's not a good sign. So they got to be equal or close to equal.
Got it.
So the down volume or the up volume has pretty close to be equal to the down volume, and the up candle pretty close has to be equal to the down candle. There's variations, but that's how you can tell. So anyhow, so they had just as much up strength to the down strength, and that reverses the whole thing. They call them railroad tracks. Actually, Joe DiNapoli invented that, and it works pretty well. It works on stocks and everything. So, but anyhow, that's the end of that. So bull market started. We're in a consolidation. We're in the summer doldrums. The summer doldrums may last all the way into August, give or take a week either side of that. But the bigger trend's up. This is a head and shoulders bottom, which has an upside target of 740, which is about 20% higher than where we are right now. So that's that. Let's look at the gold market.
Okay.
You got a lot of interest in the gold market. This is the top window. Where's my, there it is. All right. Top window is a bullish percent index for the gold miners index. What this measures is the bullish percent index measures the percentage of stocks that are on point and figure buy signals. So for the gold miners index, there's 96.43 or 42% of the stocks in the gold miners index run. There's almost 100% of the stocks in the gold miners index run buy signals. Anything above 95, which is there's a time, here's another time, here's a time. The current is 96.43 or 42, wherever it is, and you're right there. And all those times, came at least consolidations.
Okay.
So, and we're in that time frame right now. So I'm thinking we're going to get into a consolidation. This is on a monthly, this is I don't know what this is. It could be a daily.
But it looks like a weekly, doesn't it? I think it looks like a weekly. Or maybe not.
I don't see where.
Yeah, it's not the daily. I think it's a weekly chart, maybe a monthly chart.
All right, but anyhow, this is GDX, and so you can see you get consolidations when you get that many. That's the reason why I told Tom and I talked about this chart probably about a year ago. Is you don't want to see anything above 95% of the gold miners index on a buy signal, because usually you get big consolidations. So let's look at the shorter term picture. What's going on? And this is the GDX, or actually the bottom window is the my drawing tool went away here. The bottom window.
The very bottom one is the GLD, right? You got the GDX in the middle and the GLD at the bottom. You've gone to the next chart. Sorry, that's why I was confused. Right. Okay, we've got that. GDX at the top. Here we go.
All right, so GDX, the GDX GLD ratio. Next one is GDX advanced decline. Cumulative. Next window up is the GDX up down volume, and the top window is just the GDX. And what I did is put a Bollinger Band on all those. There, you can see it over here.
Yes.
But anyhow, I put a Bollinger Band on all four of those indexes. When you get three of the four indexes above the upper Bollinger Band, in other words, it's stretched past too much of the average, and usually you get a consolidation. These are not long-term topping patterns, but they're usually short-term. So, but anyhow, over first part of June here, all four of them got above the upper Bollinger Band. And a lot of times, that's why all those blue lines across the chart going back for about a year.
And now they're all below. They're all below the Bollinger Bands.
Well, you get a close above the upper Bollinger Band as your signal. So now they're in the consolidation phase. So I think we've made a short-term top of not of any magnitude, but at least a short-term top, because the market got stretched too past the norm, and the norm is the mid-Bollinger Band. So it got too far away from mid-Bollinger Band. Right. Normally you start to pull back. So that's what's happening here. So where do we go? I think this is a double top. I got out the April high. We went back up and tested it here just a few days ago. And so I'm thinking we're going to pull back down to the 39 area. The reason why I call it 39 or the 3940 area is where the previous breakout occurred. So
you're talking about the GDX. The GDX,
yeah, I'm talking about
which
the
is
GDX.
Trading at 51 right now. You think it goes down to the low 40s, 39 area. Yeah.
Yeah, 39. It's got quite a bit of support there. And also you got, this is a monthly chart right here, as RSI above 70, and we're at 72. Previous times you get up there, I marked them back there. You can see what happened. And also you got, if you get 80% above the upper Bollinger Band, which we did in April, up around that 50 area, a lot of times the market's extended. And if you notice, all those previous times you got a double top, just like we got now. Right. So we went up and tested that area. So I'm thinking just to pull back. There's a lot of people bullish here, and this is probably not the time to really get into a lot of positions. A lot of things will still go up, but if you're 50, we're looking at least a 20% pullback here or thereabouts, and so I'd wait for the pullback, and also this may run with the market, far as the equity market may kind of be in a trading range until August or so. The gold issues may do something similar. In other words, pull back and then probably hit a bottom, August, September, and start the next rally up. But gold long term is fine. But I think over the next several weeks, I think you're looking for a consolidation, especially if you get 95 bullish percent index above 95%. All of those previous times, you at least got a consolidation. So there's quite a bit of evidence that the market, and the gold market, gold stocks have really done well over here over the last year. So they need a rest to build energy for the next move higher. So
So
bullish,
Tim,
but short-term consolidation.
you did a fabulous summation of all your the analysis that you've done. We appreciate it, folks. You can reach, you can check out Tim. What's the Oracle report? What the name is?
Just Google Tim Ord, and you'll find
Tim
it.
Ord, and you'll get in touch with him. That's fantastic. Thank you so much, Tim. Look forward to what is today? Tuesday, Thursday. See you again. Thank you.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Tommy O'Brien in the Tom O'Brien Show. In this last segment, and I do the opening call, which is the daily newsletter, market letter. I do the Tiger Technicians Hour, 10 o'clock to 11 o'clock each weekday here at TFNN. I've been here, over 20, since 2002, officially 2003, so I'm a newsletter. So I've been here a little while. I've seen a few ins and outs there. So look at this. This is the Chapman Wave automated support and resistance lines. The black is the automated based on the MACD and the stochastic that someone do this for me to automate it, and it pops up with these resistance levels, and then you've got the red ones are the support levels. So you can see 43,162 from 43,546. Those are the upside resistance levels in the Dow. Look how it worked before. They did at least stall the market, if not turn the market around. Look at the S&P. Here we go, S&P. I'll do more of this in my show, the Tiger Technicians Hour tomorrow. Look at the plethora of resistance levels in the S&P, 6,052, 6,117, and the support levels are quite a bit down. But I'm just looking at this, I'm saying the technicals for me are pretty strong in all the indices. So it's more a digestive phase, just a breather if we do get a pullback. But you can't get a pullback unless you get news that is regarded as bad news. And until you get that, you get just minor technical pullbacks, just opportunities to buy. And I'm a little worried because you've got GE, which has been an absolute leader. Look at that 247 resistance going a little bit higher. Now it's below it. You've got Robinhood. Also, it's been a leader. It's been a leader, especially for the Bitcoin as well as gold. There isn't any real resistance there automated, but it is just digesting gains. And if you want to go to Bitcoin, look, even Bitcoin has a bunch of, it's trapped in a range between 11,300, so 113,000 and 103,000. So I'm just saying maybe we get a bit of a pullback, but really some of the buying that's been going on has been persistent. Have a wonderful rest of the day. Tommy will be back tomorrow morning, 9 o'clock, and have a great evening.